Now there are so many time frames in Forex. We have the ranges, we have the 12 months, we have the 6 months, we have the daily, we have the 1 hour, we have the 5 minutes, we have the 1 minute. There are a lot of them. Now the most important question is, which time frame is the best to trade on? Now, a lot of people think that using one time frame has an advantage over the other, but that is not the truth. Every time frame has its purpose and use, and all time frames work together. Now, there are certain time frames that are more suitable for certain kinds of instruments as compared to other instruments. An example is gold. When you are trading gold, for example, now it will be much more suitable for you to trade gold on the lower time frame, like the 5 minutes or the 1 minute, than any other time frame. Yes, exactly. So this is gold on the 1 minute time frame, because if you should trade a 4 hour on gold, you are going to use a stop loss of around 700 to 1000 pip, and you don't want to do that. So 4 hour is not suitable for gold, but 4 hour is much more suitable for a pair like GBP USD for you to trade in. So that is another significant part of time frames. Now, for you to understand the entire concept of time frames, you need to understand something that we call the top-down analysis. That is analyzing your Forex chart from the higher time frame to the lower time frame for you to get the overall direction of the market before you place a trade. Now, let's go on the chart for you to understand this better. Now, on the toolbar on the top section, we have the time frames over here. So these are the ones that are favorited. Have the 1 minute, the 5 minutes, the 15 minutes, the 1 hour, the 4 hour, the daily, the weekly, and the monthly time frames over here. So for you to see the entire time frames that TradingView has to offer, you click on this button to see the time frames that TradingView has to offer. Now, because our trading style is based on price action, there are some of the time frames that we will not be making use of. For example, the ranges. Okay, I don't do my analysis with any of these ranges. So we have 1,000 ranges, 100 ranges, 10, and then 1 range. I mean, let's see how they appear, and then you get to know the reason why I'm saying that I don't make use of them. So 100 ranges, for example, let's see how they appear. So this is how they appear. Okay, all right. I don't trade using this type of ranges. Okay, so let's see. So this is 100 ranges. Let's see 1 range, and let's see how it appears also. Okay, so you can see that you can't, well, for me, I mean, I can't do any better analysis with this chart appearance. So that is why I'm saying that I don't do any analysis with the use of ranges. All right, so that is that for ranges. For 12 hours, 6 months, and 3 months. Now, because the candles are so huge, let's see the 12 months. I mean, the candles on this time frame, they are so huge, you can't do any better analysis with these type of candles on this time frame. So we are on the 12-month time frame. The candles are so big. Let's go down to the 6 months and let's see how they appear. They are still big. I can't do any better analysis with it. Let's go on to the 3 months. They are also significantly quite big. I mean, I can't do any analysis with it, or we can't do any analysis with it. So in actual fact, where I start doing my analysis is with the use of the 1 month time frame. Okay, so you can see that the candles appear much better as compared to the 12 month, the 6 month, and the 3 months. All right, so this is how the candles on the 1 month is like. So right now that we have the monthly time frame before us, what do we do with it? Now, because the monthly time frame candles are not too huge and they are quite moderate, what we do with it is that we draw our support and resistance zones on the monthly time frames. So how do we do that? We pick our rectangle tool right here, all right, and then you don't go too far back, just around this section. This part is 2017. Okay, so we are in 2026, so not too far back. So we can clearly see two peaks here that qualify as clear resistance zones. So you take your rectangle tool and then you draw your resistance right there, just like that. All right, you stretch it into the future. Okay, so something like that is okay. All right, so we've been able to draw our resistance right at this point, or this area, all right, because we have two peaks that, I mean, when it got here it stalled, it got here at this point also, its price also stalled again. So this definitely qualifies as a resistance point. Now we are using rectangles to denote this area, because now support and resistance is not a price point, it is an area. So this entire area symbolized by this rectangle qualifies to be the resistance area. It is not a price point. Okay, now where else can we see that there is also a clear support or resistance? Now when price descended to this region, it stalled again and went up. It came down again at this point and then went up again. Now you can also clearly see that, I mean, there is also slight support here that it got to, and then it went up again. Price also got here and then went up again. So this zone also qualifies as a support. All right, so I'll take my rectangle tool, or you can duplicate this. You right click on this one and then you clone it, all right, so that it will double. All right, so you can bring this one right here, and then you can have your support here as well. So this is the support and this is the resistance that we have here. So on the monthly time frame, we have been able to establish that we draw our support and resistance using this time frame. So we are done with the monthly time frame. So let's go to the weekly time frame. So yes, 1 week, and let's see what we have. So what do we do on the weekly time frame? So on the weekly time frame, we also draw support and resistance points or levels that were not very clear on the monthly time frame. All right, so don't go too far back. Okay, so at this point we'll be okay. So let's pick our ray tool. All right, this time around we will not use a rectangle. Let's pick our ray tool. All right, our horizontal ray, and then at this point right here you can see a resistance right here. All right, so click on it. Price got to this point and then it quickly collapsed. I mean it did same here as well, with a slight collapse right here. So you can see that this level qualifies as a resistance as well. So this level was also broken through and was also risk tested. All right, another very good way of identifying very good support and resistance areas is when the area is broken through and then retested. That is one of the ways to identify very good support and resistance areas. In subsequent videos I will make a very special video on how to identify very good areas of support and resistance. All right, so where else can we identify as support and resistance? Okay, this right here also qualifies as a resistance. Okay, so you can see that price got to this point and then, let me do it properly, and then stalled. It came back up, broke through, and then retested that same region. All right, so it also qualifies as a resistance. Now at this point, these two double peaks as well also qualify as resistance. So we'll make sure we get our ray and then put it right there as resistance. All right, So that is what we do on the weekly time frame. We identify support and resistance levels that are not very clear on the monthly time frame. So let's go on to the daily time frame and let's see what we do there. So these are the time frames that I use for my top-down analysis. So we are on the daily time frame. So you can see that as we descend down the time frames, the candle sticks become more clearer and more defined. All right. Okay. So this is the daily time frame from the point we started drawing our support and resistance level. Okay. Sometimes it baffles me when I hear Forex mentors, show chat to people and then they will ask you, so what trend are we in? All right. It's a very funny question that a lot of, people try to ask beginners. Show you in a chat like this. There are so many things happening in this chat. On the daily time frame, that is where we do one of the very most important things in Forex. We identify the immediate trend on the daily time frame. This is where we identify the trend. If I say the trend, I mean uptrend, downtrend, or the sideways trend, or what people call it the ranging market. Okay, so from this point, from this point to, let me denote it properly, from this point up to this point right there. Okay, what trend are we in? You can clearly see that we are in an uptrend because the market is making higher highs and higher lows. Okay, now from this point up to this point, you can clearly see that the market is in a downtrend. All right, the daily time frame will help you to identify all these trends clearly. Do you understand? So that is why the daily time frame is very, very important. Now from this point to this point, you can see that it is not it slightly went into an uptrend and then it went into a sideways trend for some time before descending downwards. So from this point to this point, you can also see another downtrend. All right, because the market is making lower lows and lower highs. All right, from this point to this point, I know by now you can tell what type of market the chart is in. Is in an uptrend, and from this point up to this point, we can also see another uptrend right there. All right, so in that manner, I believe that you have understood the concept of trend. So this time frame, the daily time frame, will help you in identifying the type of trend that we are in. All right, so let me take these off. Now, don't forget that a more technical way of identifying the trend of the market is with the use of the trend line, right here. So we started from this point, that is the inception of the trend. Okay, you pick your trend line and then you click on this point and then you just drag your mouse right through to the points, this point right here, this point right here, just along the point. Okay, up to right there is okay. All right, so it has a reason why it's called a trend line. Okay, so you can see the bounces on the line. All right, now anytime that it bounces on the line and goes up, it maintains the trend that it is in. All right, so in this case, in an uptrend, so immediately it breaks up the line at this point. All right, it begins to initiate a new trend. All right, it begins to initiate a new trend. So right now it broke the trend at this point, and remember that from this point I showed you that from this point up to this last point was a downtrend, right? But because I've been able to do it without a trend line out of experience for a very long time, even without a trend line, I we'll be able to identify whether it's in an uptrend, a downtrend, or a ranging market. All right, so that is that for the daily time frame. So on the 4-hour time frame, let's see how it looks like. This is how it looks like. The candles become smaller and smaller as we descend down the time frames. The 1-hour time frame, all right, the 15 minutes, okay, the 5 minutes, very small, and the 1 minute time frame. So these time frames from the 4-hour, 1 hour, 15 minutes, 5 minutes, and 1 minute, these are the time frames that I take my trade entries. All right, these are the time frames that you want to look at, depending on the market condition. These are the time frames that you want to take your trade entries in. The above time frames, the daily, the weekly, the monthly, are more of the analytical time frame. That is where you analyze your charts, and then you come down to the 4-hour, the 1 hour, the 15 minutes, the 5 minutes, and the 1 minute to actually take your trade in these time frames. Now, what I will tell you is that do not focus on only one time frame. It is not done in Forex. All time frames are very important in Forex chart analysis. Now let us go back into the chart and see a proper trading example. So now we've been able to establish that no single time frame is important and all time frames are supposed to be used together. So on the monthly time frame, as we have here, we've been able to draw our support and resistance levels. You can see here. Now when you draw these levels, because you'll be trading all the time, there's no need for you to take it off. It should be there, and TradingView does a very good job of saving it for you. All right, so right here you can click save. When you draw all the important stuff on your chart, you can just click save, and then TradingView will make sure that all these rectangles that you've drawn on your charts will be saved. There's no need to redraw them again. Once you re-log in to analyze your chart, they will always be there. So on the monthly time frame, we've already drawn our support and resistance areas right here. All right, let's go on to the weekly time frame. All right, on the weekly time frame also, what is it used for? We draw the resistance and the support areas that are not very clear or visible on the monthly time frame using the rays. So these are them. All right, they are here. All right, then you just don't have to go too far back, because I mean, just the immediate trading area is just enough. Okay, so that is that on the weekly time frame. On the daily time frame also, what do we do with it? We find our immediate trend using the trend line. All right, so from this point up to this point, you can clearly see an uptrend right here. Okay, so from this point, it broke through the trend, the uptrend, so it's telling you that it's trying to go down. So that's a downtrend right there. That's a downtrend right there. All right, so from this point, it's a downtrend. Okay, so that is it. Now let's say you've done all this and you are using a strategy like the trend line third touch entry strategy. All right, you've done all the top down analysis, and now you're on the daily time frame, and you can clearly see that price action is trying to break up this point on the trend line, which is actually an uptrend, to go on the downside. Okay, so let's see that I beg your pardon, let's see how that folds out. Okay, by using the replay tool. So we are still on the daily time frame, so price action has clearly broken up this trend line, so we are aiming for the downside. If I say we are aiming for the downside, what I'm trying to say is that we are trying to go on a downtrend. Okay, so let me pause it right here. So we can see our first high right here. Your trend line should be able to touch the last wick of the candle. Okay, so this is a high, this is a low right here. Okay, so the next point should be able to touch this point right here. Let me show you. All right, okay, let me go back a little so that you can understand what I'm saying. Okay, good. So this is a high, this is a low, and this point right here is a lower high right here. So the impulse coming from this lower high clearly broke through this low, making this what a lower low. Now you can clearly see that there is a bullish engulfing candlestick pattern right here, meaning that the impulse is trying to go up again to find a third touch on the trend line. So at this point is where you actually go down to the 4-hour time frame. So let's go to the 4-hour time frame and let's see how this looks like. All right, so you can see that the candles are more defined at this point now. Great. So on the 4-hour, even though you have adjusted the trend line on the daily time frame, you can readjust it properly to make sure that it touches the wicks of the candles properly. It is a normal occurrence when you use the trend line on the daily time frame. When you immediately switch to the 4-hour time frame, the trend line shifts a little bit from the wicks of the candle. It's normal. So at this point, let's see what happens. The impulse is trying to go back to the trend line. So this is where I talk about the fact that you use your 4-hour for the entry. It does a double bottom to gain more momentum to the upside. Let's see what happens. All right, it breaks down to the downside. Okay, so Forex is just a waiting game. All the time that the candles are doing this, you need to be very patient and wait till the time it gets to where the line is. All right, so we can see some significant moves on the upside. All right, okay, it's getting close to the trend line. Okay, so it teases a little bit. Okay, let's see. Okay, you're getting closer. Okay, right there. All right, okay, so let's pause it right there. Okay, so you can clearly see that the impulse have gotten to where the line is. All right, now right at this point is where you will do your entry. All right, so that is why I told you that the entry is done on the 4-hour time frame. So what do you use for your entry? You use your candlestick chart patterns. The evening star, because you are selling. So evening star, the bearish engulfing, and then cool. These are the candlestick chart patterns that will actually confirm whether you are to sell or not. It doesn't always mean that when it gets to this point, it will always bounce off the trend line. It can also break through as well. So that is one thing that you have to take note of. So let's see what happens. Very good. So we can see a very clear bearish engulfing candle right there. Okay, so at this point, what you have to pick up is your sell tool. All right, so short position, you put it right here just below where the candle is. Your stop loss shouldn't be too much. Normally I aim for something between 50 and 70 pips, thereabout is okay. All right, and then you should be targeting this point. All right, this point should always be your take profit region. Okay. All right, so let's see how that folds out. Okay, let's put it there. All right, so we go into a slide drawdown for a little bit.
Oh, hell no!
Let's see what actually happens. Okay. Okay, we're coming down. Okay, so we are in profit now. At this moment, we should be very, very joyful. What we are looking for is to hit our take profits so that we can exit the trade. Okay, it's trying to play around a little bit. Okay, so the large impulse downwards. Okay, right there. Okay, so we just hit our take profit, and this is how the trade goes. All right, so I hope this tutorial video was very, very clear to you. So now we've been able to establish that no single time frame is actually important. On the monthly time frame, what do we do with it? We draw our support and resistance levels on the monthly time frame. On the weekly time frame, what do we do with it? We draw additional support and resistance levels on the weekly time frame, which is not very visible or very clear on the monthly time frame. And on the daily time frame, we try and identify our immediate trend, whether we are in an uptrend, a sideways trend, or a downtrend. And we use the 4-hour, the 1 hour, 50 minutes, 5 minutes, or the 1 minute time frame to actually enter into the market. Most of you who have been enjoying my videos have not been subscribing to the channel. I will kindly urge you to subscribe to the channel and then like my video as well, so that the YouTube algorithm will also show my videos to other people and they will also benefit from what I'm actually teaching. I thank you so much for your time, and I always will appreciate you all. Thank you.